What is up, big dog? Welcome to a trade breakdown for Wednesday, December 17th, where I banked over $23,000 in profit trading my funded accounts. So let's just get on these charts real quick. All right, so here's a sped up video of me actually managing the trade, and you can see it was testing my stop loss so many times. If I would have so many opportunities to move to break even on many different, pullbacks and everything, and I'm just glad I didn't. I am learning that it's best to just let the complete idea play out to avoid me going on tilt, because it's one thing to lose on a trade, that express an idea and it simply doesn't work out. It's whole nother venture to lose on a trade where you mismanaged it and it goes to where it's going to go, and that just completely puts me, at least, in a state to where I feel like I need to make that back and I need to go and make it right and take my money back from the market. And whenever I go on tilt, I've never had a session where it ended and I was like, oh, I traded that perfectly. But as you can see, the trade worked out and we're happy. So typically I'm going to be starting off everything on the 8-hour chart. Well, I guess the weekly I start off on the daily, but mostly, or like beginning of the week, I'll make sure there isn't any obvious daily levels that I need to pay attention to or daily price action that I need to pay attention to. But for the most part, I am looking at the 8-hour chart. And today, the first thing I was looking for was going to be, I was actually bullish. Honestly, I was thinking we were going to be bullish coming into this session, and then the chart just showed me different. So I just went with what the chart told me, which is how we should trade regardless. But I was thinking that we would have closed above this level here. I was thinking that this level right here, which had been keeping the market down since yesterday or since Monday, would finally break, because market was getting pushed up, slowly just doing this thing, making its way up. And there we go. Slowly doing this thing, making its way up to this, but just kept staying there. So I was thinking, oh, we're pretty far above there by over 100 points. Come 10 a.m. Eastern, which is when I actually am greenlit to trade, I'm sure we'll be above that, and we weren't. So when we didn't close above this zone here, or at least this resistance level here, I was then looking bearish at that point. I was like, confirmed, market doesn't want to be above. We're selling off in a major way. Let's start to actually zoom in to either the 1 hour to see if there's a short setup that is just makes sense immediately as soon as I look at it. So I looked at the 4 hour, and the way that I trade, or the way I get context in the market, isn't with indicators or anything like that. You have moving averages and VWAP on my chart. I don't really use them. I may just see how price is reacting around those areas, but I don't use them to give myself any ideas as far as, oh, I'm going to take a bounce off this or anything like that. Simply just to give me, I guess, a little bit more context on the market. But when I saw this 4-hour candle close below this zone here, for me, the way that I trade, and it's fractal with the way I look at it, I'm going to be trading. So when I get context on the 4-hour, I'm going to use that same type of mindset on trading the 5-minute and the 1-minute charts to get entries, or even the 15 or 30-minute chart to get entries. So when I see that we had this candle here close below this zone, at that point, I was like, all right, I'm looking bearish now. And that's when I ran my fibs from the high of the candle that broke the zone. So when we're looking at the way that I'm getting context, you're going to try your best to use Fibonacci to just give you an idea of percentage of retracement. My levels are a little bit different. I'm actually going to change them up, because to be honest, if you use fibs just with 4 different levels, you do fine just with 4 different levels, and then I guess 8 different levels if we look at it. So just 0, obviously 25%, 50% and 75%. And then if you just simply broke the distance between 25% and 50% in half, you'd have 37.5, which is almost a 38.2, almost exactly. And then the 62 level, obviously it'd be 62.5. So it's just like, you could just literally just use those 25% increments and then the 12.5% increments between. So looking at that, I ran this fib here. And when I seen that we had retraced to between the 25% zone and the 38% zone, I was like, all right, that's still good momentum, even though we did have this buy up here to end this 4-hour candle there. So at that point, I zoomed into the 1-minute. And at the 1-minute, with that same thought process as far as how I'm going to get an entry, we had this level here, this zone here that was printed, and actually would have been there. So we had this zone that was printed here, and this is where the candle closed. So this was the 8 o'clock candle here. So we closed up here. We had this candle here close below that zone. So for me, when a candle closes below a certain level of interest, instead of just bouncing off, we had this first initial hit there where the candle bounced up and then the next candle closed below. For me, this candle was my trigger for entry candle. So my entry was roughly here, maybe a little bit higher because of that retrace, but we had entry after this candle broke this supply and demand zone on the 1 minute, and I put my stop above this candle here. So the leg that started the push that broke below us zone of interest is going to be my stop. And so that's where I had it. And I was in this trade for a little bit. It was maybe a 30-minute, 45-minute trade, maybe less. But it was playing with me. It was making me sweat a little bit. It was doing this thing to make it look like it wanted to take my stop. Either way, I was only risking roughly 100, I think it was $200, maybe a little bit less per account to make $475 per account. So pretty good return. And once it started flushing, I exited about here a little bit before my actual target. I typically want to put my take profits right above my levels, because sometimes you get moves like this where it'll go about 5 points from your take profit and then take off. And I've had that happen so many times to where I would be at the point to where I'm going to hit my target and then it retraces and takes me out at break even or something like that, just because I was holding. And at that point I go on tilt because I essentially won my trade and I gave it all back. And so in my mind, I'm like, I got to spin the block on the market real quick. I got to go make that back. So at that point, I was just like, as soon as we got this push back down here, I just closed it roughly around here. And that was the trade. It was a very simple trade, but I think if we just simplify the way we're looking at entries, it'll just make it way easier. It doesn't, like every strategy, it doesn't work so simply every single day. You will get points to where you're chopping, you get caught in trap or chop or whatever, but that happens no matter what strategy you got. If the market isn't trending, it's just not trending. If it's just choppy at times, it's just about keeping your risk under control and keep your emotions under control and just being logical with your execution and not being emotional with your execution. So if I hadn't got on the 1 minute, if I hadn't gotten this signal to enter here, I was essentially waiting for at least a signal on the 1 minute chart to key me into the trade, which was here. It was right after the close of the 8 o'clock candle. So it's perfect. So just looking at that, we got entered in there, tested a bunch, but then ultimately just fell to our target. And if I haven't done it already, I'm going to insert me actually holding the trade. I'll speed up the video, but you'll see what it was like for me to actually hold the trade and how I managed it the whole time. But see if we got another one, see if we got a signal on another time frame. So we could have taken that same logic was applied on the 3 minute too. So we could have roughly got the same exact entry, but it happened on the 3 minute too. We had this up here and then we had this candle close below. So either way, whether 1 minute or 3 minute, it was roughly the same exact trade. We had this candle close back below this zone of interest, and you just put your stop above the high and you can see it worked out. I'm not sure if we got a 5 minute. I doubt we got a 5 minute. Nope, no 5 minute. But you can just see that if you just use areas of interest and then seeing price confirm that it wants to be below those areas of interest, and then just having a very, I'd say that stop was fairly tight given the volatility of the market today. If you do that, you'll do well in trading. Another way that trade could have been handled would have simply been to trail on the 4 hour and just simply enter on the close, which did, and roughly would have got a better entry, to be honest. A little bit of a better entry, but my stop would have been almost 200 points, which I guess if I just had 1 micro on all of my accounts and as I'm copy trading, that risk would have still been fine. And I could have caught this whole move here, which it did a full, oops, sorry, it wasn't even showing my freaking screen, my bad dudes. But if I entered here, I got a full 100% retrace or extension move, a full 100% extension move, which could have held, turn it, there we go. I could have held and taken that, but for me, I'm all about probabilities. I knew we had a level here on the 1 hour that the market could have reacted from. I knew we had this whole zone here, and I could have stayed into the negative 50. But for me, the most probable place the market's going to go, and at least I guess give me the most confidence of probabilities, will be the negative 25%. Sometimes you can see it's obvious it'll want to go to the negative 50 or the negative 100. Looks like it's wanting to maybe even come back and retest the zone down here. Maybe, I don't know. But other than that, that's the trade breakdown. The context and the entry. If you can get those two things every session, get some context and a great entry signal, you can do great. But along with that, you do have to keep your risk great and your logical execution great. You can't be emotional and you can't be super risky. So I'll be doing more of these trade breakdowns. And if you guys have any questions on the strategy, drop them into the comments. I'm happy to help as much as I can, and we'll go from there. So see you guys in the next video.